And so we have our next speaker. It's Huw Davies from OZONE company. It's a UK-based provider, open banking provider, and very high-skilled team that participated in open banking standards development in the UK. Right now, OZONE has like exclusive contract in Saudi Arabia regarding open banking standards development and sandbox development as well. And I'm happy to invite Huw with presentation. Huw, how are you today? Yeah, I know you're at the airport right now.
Yeah, good morning, Kate. Yeah, thank you for the introduction. Thank you for the invitation to speak today. And I'll apologize up front. I'm at the airport in the lounge, so hopefully there isn't too much background noise. This isn't the perfect
Absolutely
scenario,
no
but
noise. Yeah, no
okay,
noise.
that's good. I can't promise that won't change, but hopefully it will be okay. Right, so bear with me one moment. Let me just try and share my screen.
Yeah, if something wrong, so we will help. Yeah, it's
okay.
going. Yeah, we see it's okay, and just full screen.
Yep, let me just move to slideshow. Okay, perfect. Yeah, cool. Yeah, thank you. Let me dive in then. So I'll introduce myself and what we do a little more in a moment. But my name's Huw Davies. I'm one of the founding team at OZONE API, and I also previously led the development of the open banking ecosystem in the UK as part of the open banking implementation entity. What I was planning to do was just talk through some of the key learnings we're seeing around delivery as we look at the various different markets around the world. So I think having a really interesting presentation on Berlin Group, I think this will build on some of those themes that we just talked through. I'll perhaps start though with hopefully a not too controversial statement that I mean, we genuinely believe that open finance and open data will change the world. It's already driving significant economic growth in markets that have started to implement and adopt open banking and open finance, and we'll see in a moment. It's very much a global phenomenon, but it's driving economic growth already. It's creating significant levels of innovation and new propositions for customers, but it's also laying the foundations for big, sustained, long-term change, whether that's economic transformation in markets, or whether that's societal transformation through helping tackle issues like financial inclusion and helping to create much clearer customer data ownership. So we genuinely believe that this move will change the world, and is already starting to do so, particularly in terms of economic growth that it's creating in different markets. Another conclusion, though, is again we've seen this around the world. Doing it well is hard. We've seen many banks struggle with implementing open banking well. Most banks have been spending many years on digital transformation and investing heavily in building digital skills, API skills, building that middleware transformation layer. But going the extra step and creating standards-based open APIs for an open ecosystem is a much harder challenge. And we've seen many banks, particularly those who've tried to build it themselves, find it has taken far longer than they expected, has cost an awful lot more. And we've seen right across Europe, banks have struggled from a quality perspective. A number of APIs have been delivered that either don't deliver a great developer experience or struggle from an availability perspective. The conversion rates can be lower than expected in terms of customer usage. So we see doing it well is hard. And as I say, we're seeing this in quite a few markets around the world, and that's a very consistent message. So just a very quick background to Ozone API and what we do. I promise this isn't going to be a pitch. This is just to set some context for the perspectives we have. So we're a technology business. I'll talk about our background in a moment, but we do two things. So we provide standards-based API technology to help on two fronts. So we work with banks and financial institutions around the world to help them deliver open APIs which comply with regulations where they exist, have the tools to go way beyond regulations we were talking about in the previous presentation. I'll talk more about that in a moment. And we also align to any all global standards that are emerging. So again, I'll talk about the standards landscape in a moment. But so one of the things we do is we power the open banking APIs for banks and financial institutions. We're doing that for about sort of 60 or so banks in many markets around the world at the moment. And as I say, it's about helping with compliance, but it's helping them go way beyond. Another thing we do is we work with central banks and regulators to help put the right conditions in place for a thriving ecosystem, and that can be a few things. So we have been and continue to advise a number of central banks around the world on the right approach to standards adoption. We're also in a number of markets providing official market sandboxes and reference implementations. So, for example, we provide the sandbox to OBIE in the UK. We provide the official sandbox as part of the innovation hub for the regulator in Saudi Arabia. And we provide conformance and certification tools as well to help ensure open APIs have been implemented well so that the foundations are strong. So it's a bit about what we do. And in terms of our background, so the founding team, so myself and Chris and Freddie, who aren't with us today, we were all involved in the design and delivery of open banking in the UK. So Chris is the guy that led the development of the UK open banking standard and led the coordination of all of the market activity to design the standard. Freddie was the chief architect and technical author. I led the development of the ecosystem. But we've also built a strong team with exceptionally deep experience in implementing open banking around the world and in line with pretty much all of the standards that exist around the world. So we've got a fairly broad perspective on this because we have hands-on experience of all of the different standards, and we're helping banks in quite a number of different jurisdictions and different regulatory environments around the world implement open banking and helping central banks. So we've got a fairly good view of what's happening. So moving on to, I guess, some of the key messages and the learnings. First thing I'd say, and I won't dwell on this, and this is something that always gets talked about. There's always a map on open banking presentations, but it is very safe to conclude that open banking, open finance is absolutely a global phenomenon. There are initiatives happening, I think kind of latest count, about 80 different markets around the world. Some of those are driven by a hard regulatory mandate, like we've seen in the UK and Europe and Brazil and Saudi Arabia. Some are driven by a much more market-led approach, such as the US to date, although that's likely to change with regulation coming in the next year or so. And some taking a more of a hybrid approach where the regulator is encouraging and creating frameworks, but really encouraging the banks to and the industry to self-coordinate and deliver. So there's a number of different approaches. I think the important thing is where it's being driven at a market level is to kind of understand the objectives and the motivations and the drivers. And I think there are some growing trends here. So I think around the world, there are sort of four big reasons we've seen for driving open banking and open finance initiatives. And I think some create the conditions for success more effectively than others. But in the UK and Europe, it was pretty much started with a focus on competition regulation and regulation to kind of accelerate innovation and competition within the market. It's created a great catalyst. What it can do, though, is it can create, and we've definitely seen this in Europe, some lines of conflict being drawn between banks and third parties. I think we're moving beyond that now, but it has definitely slowed implementation, albeit very good objective. I think increasingly we're seeing markets drive open banking and open finance initiatives with a focus on economic growth, economic transformation, and societal transformation. My personal perspective, if the ambitions and the outcomes at the beginning are based around these sorts of objectives, I think it creates the right conditions for open banking and open finance to be far more successful, far more quickly. So a couple of examples. Again, we're working very closely with the central bank in Saudi Arabia, and there they've set a really ambitious vision to transform society, the Vision 2030, and many aspects of society. But a big part of this is about transforming the economy, reducing dependence on oil, and creating world-leading industry sectors. Financial services being one of those, and open finance is right at the core. Because the objective is about growth and success for all, the way the open banking framework has been developed is much more balanced, and I'll talk about that a little more shortly. But similarly, in markets like Brazil, there's a huge opportunity to tackle big issues like financial inclusion, where we've got 50 million adults that are still unbanked. A fourth model we've seen, for example, in Australia is really using this as a foundation for enabling customer data rights at a whole country level. So putting in place the digital infrastructure for a customer data right. And it just so happens that banking is the first sector because it's a well-positioned sector. I think the reality is, done well, open banking will drive all of these different objectives. What we're seeing, though, is markets that have kind of a progressive growth-focused objective are doing a better job of kind of winning the hearts and minds of the industry, and that creates better kind of implementation conditions. But however it's driven, I mean, there are clear motivations for the market participants. So, for customers, of course, this creates a lot more innovation and more options for how they manage and engage with their finances. For third parties, again, this is creating an opportunity to build new propositions, create new business models, accelerate more quickly. Really importantly, for banks, this is transformational if it's done well. And again, I'll talk about that more in a moment. What I will say is a market approach has to consider the motivations for banks to ensure a good implementation. But as I say, I'll cover more about that. One of the challenges we're seeing around the world is there is definitely a fragmentation of standards. And we just heard about from the Berlin Group about the Berlin Group standard, but we've got the UK standard, we've got FDX, which is a dominant standard in North America. We've got the Brazil standard, which has broadly been built on a similar sort of foundations to the UK. We've got Bahrain, Saudi Arabia, the Australian consumer data right. There's a large number of standards that have emerged around the world. I think that's okay if they're based on some interoperable foundations, particularly the security model and protocols. So increasingly, most new standards are being based on the OpenID Foundation's FAPI standards and protocols. That creates a level of interoperability, which then means if there are differences at the functional level, because different jurisdictions are focusing on different product sets, and or there are different sort of tax regimes and things, that's probably okay. But interoperability will be key. I think there will be a point where we need to reverse this fragmentation trend. We fundamentally believe that for any market, looking at driving open banking and open finance, standards are absolutely critical. They're the key foundation. And picking an interoperable base is an existing best-in-class global standard that has a sort of common security model, I think is really key. So there's fragmentation. It may not necessarily be a challenge, but it could be. But kind of move to some thoughts on best practice from the work we're doing around the world. I'll perhaps focus on a couple of areas. So in the last presentation, we heard a lot about standards and the Berlin Group, which is again, I think, a great example of a standard that's looking to go way beyond just the requirements of the regulation. And as I've mentioned already, standards are absolutely critical to a successful program. As the previous presenters outlined, if every bank did it differently, there would be so much complexity and cost in the ecosystem that it will never be as effective. Open ecosystems need standards. Without that, they will fail to scale. However, the key point I'd make is standards alone aren't enough. So we've seen, we look across a number of markets where standards are used, they're not always used consistently. So I would also absolutely advocate you need to have conformance and certification in place to ensure a really solid foundation. The markets where we've seen conformance and certification regimes implemented, the ecosystem develops much more quickly and efficiently. In the UK, the 9 biggest banks were required to go through conformance certification. So it creates a much more common implementation of common standards. And we have seen, without doubt, the UK evolve far more quickly than the rest of Europe, where even if common standards like the Berlin Group are used, each bank may implement them slightly differently. So third parties have a lot more integration work to do to connect to each bank. So what we've seen is the markets where conformance and certification are a part of the framework and regime, start to build and thrive far more quickly. Brazil took it a significant step further than the UK. In Brazil, every single financial institution must go through standards, conformance and certification. Effectively, what that means in the market is you can build an integration layer once and then just plug into every single one of the banks without significant rebuild. It's just dynamic onboarding with the bank. It's not rebuilding for each bank, which is the case in Europe. So standards, conformance and certification is a key part of the regime. And again, we're really pleased to see that progressive regulators like the Central Bank in Saudi Arabia are also recognizing this, and conformance and certification will be a key part of the framework there. So what we're seeing is each new market recognizing important standards, but increasingly also recognizing the importance of conformance and certification. In fact, a step further, a number of markets are also looking at how do they also get in place much more rigorous monitoring of the bank's API performance. We look in the UK, you can get some very big differences between the performance of different bank APIs. So standards are key. Conformance and certification take it a step further, and then ongoing monitoring is another route to ensure the ecosystem's working effectively. Another really important learning, and this links back to those overall motivations for a market, but user-centric design of the open banking framework and the open banking standards is really important. What we saw in Europe was regulation was written that actually, rather than sort of principles-based regulation, it also got into how to deliver things. That actually created a bit of a handbrake on innovation. And then the implementation approaches had to be designed around that regulation. What we're seeing in some of the more, the markets that have been going more recently and learning from those pain points is they're taking a much more outcome, use case and user-centric based approach. So if I go back to what we're seeing in Saudi Arabia again, as an example. So there, the regulator had a very clear view of the outcomes they wanted to achieve. They want to deliver a global leading financial services industry, and open finance is a core part of that. And for that, there has to be sort of strong incentives for all users. And the way the approach was started, so there was a primary sort of high-level legislation, but before it got anywhere near the secondary implementation, the process that we went through and the process that the central bank went through was to think through, actually, what are the key use cases that will really enable those end outcomes? Not with a view to limit use cases, but with a view to ensure that whatever was built around the use cases that would have most impact for the ecosystem. And that means customers, third parties, and banks. So it started off with kind of clear view of outcomes, a conversation and a definition of what were the key use cases that would really enable success. And only at that point were the standards developed, and the standards were basically, it was taking existing global standards and ensuring that they were appropriate to enable the key use cases that were seen as important for the market. And then the business rules, which are effectively the sort of secondary legislation, the framework for how it should operate. So standards were purely about kind of the how technically it should be implemented. The business rules very much about how the ecosystem should operate. But that all followed a really clear definition of the outcomes, the desired outcomes of the key use cases. So there was the sequencing was really important, and it's resulted, I think, a set of enhancements to existing global standards that are really quite progressive, which again I'll talk about in a moment. Again, industry collaboration, open source, and kind of open approaches as philosophy. Actually, those standards in Saudi Arabia haven't yet been published to the wider world, but that will surely come. But the approach that we've seen has been really important. Think about the outcomes, think about the users, think about the use cases first, and the technical implementation considerations and secondary legislation should follow and be enablers of those use cases and outcomes. Another really important thing as well is making sure that there's a balanced ecosystem view in how open banking is implemented. We've seen in some markets, the way it's been designed, it's almost being done to the banks rather than for the banks. And frankly, if there isn't a good incentive for banks to do it well, the foundations won't be strong. If it's seen as a compliance project and a compliance initiative, the banks won't embrace it in the same way as if this is a genuine growth driving channel. So I think any implementation, any market framework design, there needs to be consideration to ensuring balanced incentives across all participants. So that the end customers, making sure it's doing right things to unlock value for the end customers, the third parties that will connect, and the banks that will expose the APIs. Of course, banks are all acting as third parties as well, but there has to be some understanding and appreciation of commercial balance. As we saw in UK and Europe, it was a bit too compensational at the beginning. The way the regulation was defined and implemented, it very much felt like it was being done to the banks, not with the banks. As I say, I think that has changed somewhat now, but for new markets, I think it's a really important consideration. So, and I'll spend a few minutes just on why. So what does this mean for the business model of a bank? And what are some of the really interesting things that, done well, it can enable banks to do? So I'd perhaps start with a statement that this shift towards open finance, open banking, open APIs it will completely transform the banking business model. Again, this is building on the points from the last presentation, but the historical sort of universal banking model, it's very much a vertical supply chain. Banks have the licenses, they build the products, they have the balance sheet, and they sell the products primarily through their own channels, their branch, their website, their apps, but the customer has to go to the bank typically to engage and manage their finances. I think this new world, it creates kind of two alternate roles that banks will need to master. Now, some banks might focus at one side, other banks might focus at the other, but fundamentally, the vertical supply chain starts to get broken up. On one side, I think what this world allows banks to do is expose their products and services through, again, standards-based, ideally, APIs that allow what they do to be built into customer experiences. So the bank products and services can appear in front of the customer in the right place at the right time with the right context. So very much that embedded finance concept. And a parallel I draw is Google Maps. So Google built a great product in Google Maps. The reason it's so pervasive today, it's in, I don't know, your exercise app like Strava, it's in food delivery apps, taxi apps, it's in so many different platforms because they made it available as a great API. So with great developer tools, it adds a huge amount of value. They're earning every time it's used, and it's powering lots of different propositions. That opportunity exists for banks. This isn't a compliance project. This is about how do you create a great developer platform so your products and experiences can be embedded in the right place when your customer needs them with the right context. So whether that's in an accounting platform, so you can offer a credit line, kind of easy to switch on credit line at the right point when a cash crunch is coming, or whether it's buy now, pay later at POS, or the various different use cases we'll talk about. So that's one side of the equation. The other is how banks can leverage this new world to become a great distribution platform. Now, banks channels, banks apps, I mean, arguably, they're probably used second most to social media and communications apps. So banking app, you tend to engage with pretty frequently. Banks know the customers. They have a huge amount of insight. This creates the potential to piece together far more of what the customer needs without having to build it all themselves. So again, a good parallel is we look at Amazon. Now, way more than half of everything that's sold on Amazon are the products of other merchants, other retailers. What Amazon do is they focus on certain key product lines and do them at scale. And then they want to make sure that whatever you want, you can get from Amazon, and they have the whole marketplace play to do that. So again, this creates the opportunity for banks to really evolve their channels to serve more of their customers' needs. That might start with simple things like seeing their whole kind of aggregated balances and things, but it can quickly extend into providing much more value-adding services for the customers' everyday lives. So these two different models that I think kind of the bank of tomorrow will need to master. And part of this is kind of this concept of premium APIs, and there's a lot of conversation around premium APIs, and I'd probably make a couple of points. So as I've already said, so in exposing APIs to the outside world, standards are critical. So using standards for compliance APIs and then building something proprietary for other services will not work and will not scale. So standards should be the foundation for any APIs that are being exposed. And also any API, whether it's driven by regulation or is a value-adding service, they should be useful. They should be adding value to the platforms who are using them and the end customers who are benefiting from them. What I'd say though is that this question of kind of regulation versus premium, it's not black and white. It looks different all around the world. So I would say kind of regulatory mandate doesn't always mean free. in a number of different markets around the world now, we're seeing regulators say you must expose these capabilities, but they can be commercial. For example, areas like payments, there's real cost, there's real liability. So we're seeing other regulators recognize actually payments should be a commercial market space, but maybe pure basic data access should be free. So regulation doesn't always mean free. There could be APIs that come with a fee, but beyond regulation also doesn't always mean to be paid for. Banks may expose APIs that enable products and services to be embedded in third-party journeys. It's in the bank's interests to get them as far and wide as possible, because it helps capture new customers and sell more products. The right strategy may not be to charge for the APIs. It may be to get them out there and used as much as possible. Whereas other services, there might be a real value-adding APIs, such as identity attributes or premium payment APIs, where there's a very clear value model for a third party to use the API. We know many of the third parties would pay for richer payment functionality, for identity attributes data. There's a whole series of premium services where the right answer is to pay for use of the API, and there are others where it's in the bank's interest to just get it out there and use. So there's very much a kind of this view beyond regulation should be paid for, regulation should always be free. That's not really the reality we're seeing around the world. The way we see this this model moving forward, and sorry, I realize there's quite a lot on the page here, but what we do is we aim.
You just have up to 5 minutes. Is it okay for you to?
Yeah, absolutely.
Okay.
I'm heading towards the end now, Kate. But thank you. Yeah. So what we do is we provide a platform that helps banks expose APIs, and as I mentioned, in line with whichever standards for wherever they're operating. We think there are kind of some core blocks of capability that banks really need to expose all of the different models to regulation and drive real commercial outcomes. So a lot of open banking regulation around the world is just around kind of read access to information. Now, often that focus is around basic transaction data, balance data, but there's a whole series of other data sets that banks have got that could add value: identity attributes, enriched data around affordability, and there's a set of information banks have that they could expose and monetize. We also see regulation including payment initiation. Effectively, that's starting a process, a money movement process, creating a payment initiation request. Now, again, kind of we see there's a set of capability blocks, and we saw this in the previous presentation, but APIs that enable single payments, recurring payments, bulk payments, cross-border payments can enable a whole load of revenue growth opportunities for banks, as well as providing a platform for great embedded payment experiences. But there's another concept which none of the open banking regulations so far have really considered. First one to do so is the new framework in Saudi Arabia, and it's this concept of service requests. So payment initiation is effectively it's starting a process which the bank then fulfills, making a payment. The same principle can exist with any digital process that banks have. That could be creating a new customer relationship, setting up a credit line, opening an account, changing details. These are all services that if banks can embed them in third-party experiences, they can help catch new customers, drive increased product sales, create direct new revenue streams through premium APIs. So the standards around the world, I think, need to continue to extend to cover kind of broader range of services, and that's what we're trying to help around the world. But if you get the right foundations, it enables then much more flexible sort of API sets, which enable bigger and bigger volumes of use cases. Just to kind of conclude there around standards, so I think payment initiation is key for open banking. So without payments, open banking initiatives are it's access to data. You get financial insight, but without the ability to take action. And we're seeing around the world, payment initiation is starting to really pick up. there's a very broad range of use cases that can be supported, and there's a very clear commercial model that can enable banks to generate revenue, merchants and third parties to get a better deal than they might through other payment channels, and customers to get better end experience with zero data input and much safer payment channels. So payment initiation, I think, is key for any market. It has to be more than just access to data. Again, some examples in UK, we've now seen the tax authority take over £8 billion in payments through open banking. It's huge numbers. It's a really interesting use case. We're also seeing the banks move beyond just single open banking payments to support variable recurring payments. We ran a hackathon last year to get the market excited around variable recurring payments. We're now seeing the big bank, NatWest, leading the charge, and they're starting to drive variable recurring payments at scale with a number of third parties. So kind of payments are key. But this concept of service requests, enabling banks to embed services that help them drive and grow their business, will be one of the things that really makes open banking work and really creates the motivation for banks to implement it really well. So again, we're helping banks around the world deliver sort of APIs that support these different use cases so that they can embed what the right place, the right time, with the right context, and moving away from that model where their customer has to come to the bank shop window. And then again, on the data side, it can be more than just basic transactional data. So things like identity attributes can be really valuable APIs. So simple proof of age APIs, or proof of address, or full sort of onboarding or income verification. There's a whole bunch of information that could be exposed that go way beyond just sort of basic balance and transaction information. So to conclude, I guess definitely a global movement, and there are some key learnings from around the world. Standards are absolutely critical for a market to form and evolve effectively, but it is about more than standards. So conformance and certification is key. Otherwise, the market will still be fragmented and slow and expensive. But also there needs to be a real clear consideration around how do you create balance and value for all participants. So this should be done with the banks and for the banks rather than at the expense of the banks. Those objectives that we set out earlier around increasing competition, economic growth, customer data ownership, tackling challenges, all of those can be achieved in a way where there is still good incentive for banks to do it well. If that incentive isn't there, they won't deliver great APIs. The market will take far longer to form, and that's exactly what we saw in Europe. And it's about way more than data. So this
Бачимо це в Європі, і доступ до даних – це ключова сторона цього процесу, але платежі – це також спонукання до дії, і це створення нових інструментів в фінансових послугах.
A key driver for the bank business model. Yeah, they were the main points I wanted to cover. More than happy to take any questions if there are any, or if there's time. And I hope there wasn't too much background noise, because it's been a little bit busy behind me.
Huw, thank you so much. The question regarding conformance tool. What is the right path to implement it and to make it working well? Should it initiate any regulator or community builder kind association or someone else?
Yes, so it could be done from a couple of places, and it can be done in a few different ways. So in a number of markets, we're seeing the regulator mandate conformance certification and oversee conformance certification. In other markets, it could be a standards body that creates that conformance and certification regime. If we look at the UK, for example, or Brazil, the FAPI element of conformance and certification is done with the OpenID Foundation, and then the functional conformance and certification is owned by the regulator. But the banks have to go through a full conformance and certification and get certified at regular periods if there's been any significant change, or if there are standards changes. So yeah, it could be done by the regulator, it could be done by an association or a standards body, or it could be owned by a regulator but outsourced to another body to then deliver the conformance and certification model. There are also a couple of ways that this can be done. So it can be done on almost a manual and occasional basis. That's what we're seeing in UK and Brazil at the moment. At certain banks have to go through conformance and certification and then deliver their certificates to show they are conformant. There are models. We're building this for some regulators where you could have an always-on conformance and certification model. So you have always-on checking of the bank APIs to ensure they're available and they conform to the standards. And that becomes a monitoring tool as well. So that's a step way beyond what we're seeing in markets like UK and Brazil, but a number of the regulators are thinking this way. So it could be done by different players, and it can be done in a few different ways. But what I'd say is whichever model is chosen, just choosing a standard on its own isn't enough. You need conformance and certification to ensure that it actually gets implemented consistently and properly by banks. And it's in the bank's interest as well, because it reduces cost and makes it much more scalable.
It's very interesting. Thank you so much. And I think it's quite useful information for EMA, right, Sasha? Maybe it can be like a separate discussion on that.
Yes, thank you, Huw, for this information. We'll discuss it in a couple of hours.
Okay.
No problem. You're very welcome. So thank you for the time. I will leave you to, because I've got to go and get on a plane soon, and I hope the rest of the event goes well.